Tier 1 liquidity from major banks, distributing that Tier 1 liquidity to retail Forex brokerages. But what if you actually are a Swiss bank? In the last episode, we discussed at quite good length prime brokerage and certainly a lot of the issues that faced prime brokerage last year in terms of credit and liquidity, which are two major facets, two of the defining features of prime brokerage, which were both under fire for different reasons during the course of last year. So Swissquote, as with many of the peers here in Switzerland, has a prime brokerage service of its own and actually differs in the respect that it's a Swiss bank and it comes under the Swiss banking rules and regulations, as well as not just that, but the whole ring-fenced, in-house developed trading systems that are required by Swiss banks. So this is surely a different offering, really.
Exactly. I mean, the advantage of doing business with Swissquote on a prime basis is that institutions such as retail brokers and small to medium type of companies who are looking for access to liquidity as well as access to credit, we offer a complete solution. Retail brokers who are having this need for credits, they will establish our relationship with us. We open accounts. They can custody client funds with us. They also can have access to our deep liquidity pool that we offer, as well as getting decent margin requirements, which are no longer available to these companies from larger Tier 1 prime brokers.
Quite often that's true, and actually the Tier 1 prime brokers are having difficulty with the banks because of this. But it's a different matter for a Swiss bank. And actually, that's talking of client custody. I believe that in this country, it's entirely commonplace for individual client custody accounts to be available, which means that client funds are actually held in an account on their own name rather than in a common pool. Am I right?
That's correct. I mean, the clients each have their own individual account. They're protected under the same, the depository schemes that are in place for banks. So they all have their own IBAN.
Yes.
So it's a regular bank account.
That's very interesting indeed.
With access to trade over 2 million products.
That's very interesting because I would imagine that one of the things that the Tier 1 banks, such as Barclays, HSBC, Citibank, all the main and Deutsche Bank, all the main liquidity providers for the FX industry, which those four banks make up something like 38% of the entire order flow handling at Tier 1 level for the whole industry worldwide. Mm-hmm. So I'd imagine those particular banks are concerned mainly about counterparty credit risk because of various incidents that have happened over the last few years. One of them being an actual brokerage, a retail brokerage being exposed to negative client balances. Now, if you've got segregated client accounts and the customer can only specifically trade those instruments from that specific account, surely that's a good basis to approach a Tier 1 prime brokerage.
You still have the negative balance risk with whether the customer has a segregated account or not. But so that more or less what causes a negative balance is these flash crashes.
Yes, it is. Yeah.
And unexpected events. I think during the time when we had Brexit and the U.S. elections, they're all planned events, and nobody, from my understanding, had any experience any negative balances because everyone was prepared.
That's right, exactly.
Ahead of time.
Yeah, I think that reminds me of something which. Over the course of the last year, the liquidity shortage and liquidity difficulty getting credit and subsequently providing liquidity has been something which has faced many mainstream retail brokerages, large and small, across the world. Swiss banks and certainly Swiss Forex companies that have a Swiss banking license are probably in a good place to mitigate that on the basis that credibility and ability to actually demonstrate certain qualities that have had to be met to go through the regulatory process means a large balance sheet and very little risk to the Tier 1 bank.
Yeah. Well, I think one thing that the S&B has taught everyone is that there is no endless liquidity available.
That's for sure, yes.
And more or less, when a trader decides on who they do business with, they need to make sure that the company they're doing business with has a strong balance sheet, is transparent about all their conditions, properly regulated, and who has the greatest access to liquidity. And prior to the S&B event, this was not something of a topic. People assumed that there was endless liquidity, but nowadays, since the S&B happened, more or less people are more concerned about this, and especially the brokers who are looking for a prime solution. They're looking for providers who have the strong balance sheet, who have this access to good liquidity, and able to give credit access.
That's absolutely right. Very interesting indeed, and certainly all of us will be looking forward to seeing how the prime brokerage sector goes through 2017 when bearing in mind last year's events. Thank you very much for joining us, Ryan.
Thank you, Andrew.
It's Ryan Nettles of Swissquote.
See
you soon.
See you.
I'm Andrew Sachs-McLeod, Chief Executive Officer of Finance Feeds. Thank you for joining us here today at Dukascopy TV here in Geneva, Switzerland. See you next time. Goodbye.